Hey all, welcome to ShareTreck. This is Raj here. I hope you guys are all having a good time with the holiday season. I think most of you must be on holidays already. My wife has got her vacation started since today. So we had a very relaxing time, and after a long time, both of us were able to sit with our dogs and make our own meal and eat together peacefully. So I'm looking forward to the next week, and I think during the weekend I might even make a trip to Niagara just for refreshing and relaxing. So that's the plan. And so having said that, today what I'm going to do is the usual. I'm going to take stock of what's happening in the market. I'm going to recalibrate my thought process and expectations and plans based on what we see. And I'm going to also go through the genomics watch list. And at the end, I'll give you my conclusion, what I'm planning to do for tomorrow and what I did today and why. So with that said, let's get started. Welcome back, friends. It seems that we are at the risk of another supply-side inflation because of the container rates soaring as a result of Houthi rebel attacks on ships in the Red Sea. So there are reports that some companies are already rerouting to avoid the Red Sea, and as a result of which it's taking a longer time for goods to reach, because when you suddenly decide to change the routes, there's a whole lot of logistics behind it, loading, unloading, and finding the right carrier and everything. So established arrangements are put aside, and new arrangements are set up in a hurry. So it costs money, and it takes a lot of work and a lot of getting used to for all the work teams that are involved in the entire supply chain from the port of origin to the port of destination. So that's what is happening. The US is providing leadership to patrol the area, but it will take a little while for things to settle down. And friends, when it comes to inflation, situations like this, just the mention of situations like this creates a psychology of the market to anticipate inflation. So we have to closely watch how the yields perform, because if there is a fear of inflation, whether it is supply side or demand side, the Fed will start being hawkish, and if the Fed is hawkish, you know what happens then. Then the yields start going up, and as a result of which, money will move out of the stock market, and that's a big problem. So that said, I would say that we got to keep on watching that space. The next news item that caught my attention this evening was that Nike slashed its sale outlook and unveiled a $2 billion cost cutting. Whenever companies reveal huge cost cut plans, the stock appreciates because the money goes directly into the bottom line and becomes shareholder wealth. However, in this case, the slashed outlook led to a 10% drop in share price because Nike is just forecasting a 1% increase in revenue, and that is not good enough. So the cost saving apart, the slashed outlook has dropped it. Could Nike be the canary in the coal mine? How can valuations raise in 2024 if revenue is going to be weak? Well, I read a lot of analysts, and I'm of the opinion that AI is going to create a lot of cost efficiencies in large tech companies, especially in consumer service area, and this will add to the bottom line. A race to use AI for competitive edge is likely to push the shovel guys like NVDA, AMD, and TSMC to also appreciate in value. Even there is news that Apple is jumping into the AI bandwagon. So the theme of AI brings to my mind visions of what happened with the advent of internet. I remember when I had just gone into college, at that time, we used to have these managers, and there was a pool of secretaries, and they would take shorthand dictation, and they would go and type up letters and bring a manual copy to the manager, and he will initial, he will correct, he will sign, it will be retyped, and then it will go to the mail department and it will be posted. There was a whole lot of employment at that point of time. There were mail boys in the mail room and all that stuff. So when computers came in, there was a big fear that the people will lose their jobs. But what happened was that new category of jobs came up. Now managers use their own computers, type their own emails. There is no licking an envelope to put a stamp on it and send it across. There are no typewriters. managers are doing the job, and secretaries have grown into a different role altogether. And of course, we should not forget that after the computer advent, then we had the internet revolution, where the dot-coms came in, e-commerce came in, and we have not looked back since. And it seems to me now that we are in a stage where AI models are going to be used by various companies to create various roles. And as a result of which, the existing employees will be able to do way more than what they do. They will go up the food chain in terms of value of production, and they would use AI for a whole lot of things. And then what would happen is the productivity will go up. And that's where I think both capitalists as well as governments and shareholders have to be responsible. Already there is income inequality. And if the fruits of increased productivity went largely to the top 1%, I think we are setting the stage for a revolution or something of that sort. So one has to be very, very careful. And I hope it will be navigated properly. Do not forget that there is a robotics revolution also happening in parallel. And the ongoing quest for cost-effective and efficient battery technology is also happening in parallel. So if you put AI and batteries on top of this stack, and all of this can potentially lead to another load of jobs that can be automated. And this time it's not just going to be intellectual jobs, but this is going to be job which involves dexterity or working in high risk environments, taking autonomous decisions, and dexterity of handling various objects and various controls. So we are looking at a very, very bold new future that's going to unfold very fast. And I think most of the raw materials for that, like AI chips and AI manpower, all this thing is going to become expensive. We are going to see the top 5 consulting companies having a separate division just for AI consulting, and helping company to onboard artificial intelligence and consulting on how they can best utilize AI. So there's a whole lot of economic activity that's going to come up. So I'll be looking at companies like IBM, NVDA, AMD, the big 5 consultancy companies also for growth. And of course, the Magnificent Seven are going to continue growing. And all of this is also going to require a lot of cloud capacity. So I'm not too much worried about 2024. I think it's going to be better. I think we are in the pits right now. It's just this inflation scare, supply side inflation scare that has come in, which made me tell you this whole story. So I think that said, the next thing that comes to my mind is Cathy Woods is back into Tesla with huge purchases. And as you can see here, she has bought a whole bunch of stocks. Of course, it's just 0.25%, I think, of the whole holding. But she has re-entered after being a net seller on Tesla for a while. So that's an endorsement of confidence for Tesla. I personally feel that Tesla cars are good, but it is Elon Musk and his immature and erratic behavior that is taking a sheen off Tesla. I am holding on to my Tesla shares and hoping that some activist investor would step in and remove Elon from the controls. His political and social media shenanigans apart, removing Disney Plus from Tesla was a wrong move in my opinion. Tesla owners have children who use Disney Plus, and I think such emotional and short-sighted tit-for-tat decision-making is denting the Tesla goodwill, and it's a big risk for shareholders. So Elon Musk seems to be saying my way or highway. He's saying that he's going to do whatever he's going to do with X, and he will board anybody, he will promote anybody, and the advertisers have to come anyway. If they don't come, he's not going to buy their products as well. So this is very childish behavior, but unfortunately, in the last 10 years, we have seen childish and stupid billionaires who are trying to influence our life. This is very scary. So we have to rethink very carefully about how we spend our dollars and how we vote. I think that's the message that I would give to all the audience. That said, what am I going to do for tomorrow? Well, let's go to the TradingView platform and have a look at it. Well, friends, here we are in our TradingView platform. But before we go to TradingView, let me show you the Fear and Greed Index. And at this point of time, we have dialed back from extreme greed to the edge of greed. So I am thinking that tomorrow we are most likely to go back into extreme greed once again. That is my feeling. And if you look at the stock map, you can see, if you look at the stock map, you can see that everything was green across. And if you look at the 1 week performance, we have a whole lot of reds out here. but the Magnificent Seven, most of them are doing pretty well in here. So I'm thinking that tomorrow, again, we are likely to see green, but there will be some sectoral rotation. And if you look at the ETFs, you will see that money that had moved into fixed income yesterday has moved out. That is the rotation I'm talking about. And the money has moved out and gone back into all these shares which fell yesterday. That's why the market came up today. Yesterday, when I saw the indicators, I was very confident that it will bounce back. So today, I'm looking at this rotation. And the question is, how long will this rotation game work? And when is it going to stop? I don't have an answer for that. But if we were to look at the world stock markets, everywhere it is green. Yesterday, we had seen everything was red. So that's what I would like to leave you with as a thought process, that there is a rotation going on, and whatever goes heavily green becomes a bit red the next day and then comes back to green. So there is a little bit of choppiness out there. That said, I'm coming back to my TradingView platform where I'm looking at Nasdaq futures. And guys, as I said before, we are looking at this support which has been validated. Let me just move to another and come back here. So TradingView has got a little bit of a bug. It doesn't scale the map properly. So I always have to go to another stock and come back. So guys, what I was telling on Friday was that I wanted to see us validate this line of support and then move up, and then I would buy. But I was very tempted and I bought FNGU before that happened. But I'm happy today that we came here, we tested this support, which is at 16,765, and then we moved back up again. So this is the futures. Now let us go into indicators and look at QQQ. So if we look at QQQ, before we go, let us see where Nasdaq is. Nasdaq is mildly negative at this point of time in the futures section. And if we were to go to look at what happened today at Nasdaq, we validated this support line and we have stayed above. And we have a support from the 10-day exponential moving average. And then we have this huge band of support. So I have until here to bounce back. So if tomorrow the market goes down, and I'm then going to sell off my FNGU, even if it involves a little bit of a loss. I don't mind taking a little loss and waiting in the sidelines. I want to be absolutely sure that we are going to stay above this, because then we have a big price to look at, and that price is potentially at the best 493.45 for QQQ, and at the very least 443.41 for QQQ. Those are the projections that I have for QQQ, targets I have. And if you look at VIX, and you can see that VIX had gone up again. VIX going up is not a good thing for us, but as long as it's under 20, we are okay. So I'm not too much worried about it right now, but VIX is starting to creep up. So we have to be wary about that. S&P 500 was up 0.95%. Again, it's being held back by this resistance at 476.22, and we are getting support from the 9-day exponential moving average, which has actually supported it for 2 days continuously. We have to see what happens tomorrow. For that, I look at clues here. RSI is almost overbought. It's overbought actually. So there could still be a jump up because we have done that recently, or there could be a sideways movement. But as long as the 9-day exponential moving average holds, we are fine. If not, we are going to come and test the support at 464. And then let us go to Dow Jones, which is also doing very well. The 9-day exponential moving average has supported for 2 days consecutively. And we have a MACD, which is still bullish, but tending towards the signal line, and RSI, which is overbought, but it did drop today and then picked up in the evening again. So it could stay up for a while, especially for parabolic moves like this, but we'll see what happens tomorrow. It's not looking too bad at this point of time. US dollar index has fallen, and when the US dollar falls, then I think it becomes expensive for imports into US, and it kind of feeds into inflation. On the other hand, it makes the exports cheaper for the buyers. And if you look at IWM, IWM is continuing to be on top of this line of support. It briefly dropped below and it went up again. This is the Russel index, and Russel index has got more steam to go up again. It's at the edge of the RSI and it can be overbought anytime. So tomorrow we could either have a sideways movement or we could continue going up and probably go all the way up to 79% on the RSI before coming down. And if you look at US oil has lost 0.06%, especially because of supply. But the Red Sea issue could also have an impact out here for US oil. So we have to watch this carefully. MACD is bullish and momentum is at average. So it can go up anytime. Put call ratio is very neutral. It's at 0.94. So we are not getting any clues there. And having said that, I would like to go to look at FNGU, which is doing very well. Friends, I am tracing this cup and handle pattern, and I am expecting a target price of around $284 for FNGU. And I'm going to wait for this red line of support to get validated. If it comes down, then I will sell. So that's my plan. Apple was down today, minus 0.08%, and in the process it has gone below the 9-day exponential moving average, and it's currently being supported by the 20-day exponential moving average, which is this orange line out here. Not a very good sign, but at the same time momentum is above average, so I'm hopeful Apple will consolidate and then move up again. They have announced entry into AI, so that should give them a little bit of a jump because AI is the theme of the season. And then we have Google, which has done very well today. It opened above where it closed yesterday, way above, and continued to move up. That's why we still have a green candidate, a lot of room in the RSI to go up, and Google will push FNGU up. Then we have Amazon. Amazon also has got a lot of room on the RSI, bullish MACD, and it's looking pretty strong to me. It gained 1.13% today. Meta had gained 1.38%. Again, it's looking very strong on the charts. Netflix gained 2.34%, looking very strong on the charts. Microsoft gained 0.75%, and it's also looking strong on the chart. The momentum is picking up. It's above average, and MACD is moving towards the signal line for a bullish turn. So it's all looking good. All these stocks are going to feed into FNGU. So that's a good thing out there. And while we are talking about FNGU, we have to look at the semiconductors because we have AMD, which is also part of the FNGU, and it went up 3.21%, and it has got bullish MACD, and it has got RSI, which is overheated, but it could still go up a little bit. And we have ASML, which has done very well. It is forming a cup and handle pattern. The handle is done. Now we have to look at the target. I'll set the target tomorrow. Please come back and check again tomorrow. You can also do the target. Take a line from the lowest point of the cup to the neck and then clone it and put it on top, and then you will get the target price. It's as simple as that. So ASML is showing strength, and again we have another cup and handle forming for NVDA. Now NVDA will do very well if we have another bullish tomorrow. That will form the handle, and then we have to see whether it comes out. If it does, I have a target price of around $543 for NVIDIA. Of course, IBM is not part of FNGU, but this is also positive, getting support from the 20-day exponential average and getting resistance from the 9-day exponential average. I think IBM will pick up because it's got cloud, it's got AI, and it's a consulting organization, so it has a lot of opportunities due to the AI revolution. Having said that, I would like to go into genomics and look at all our genomic companies. IMTX did very well today. It's all sentimental trade. It has wiped out most of yesterday's loss, but it got stopped at the resistance at 9.65. It closed at 9.64. So we have to break through this resistance tomorrow, and we also have to break through the I think it's the yellow line, which is 150-day simple moving average. So we have to break through that in order to make any further progress. So looking at the fact that the momentum is above average and MACD is also bullish, I'm optimistic for tomorrow. But friends, we are looking at rotation being the game. Therefore, the shares that gained a lot today, the big gainers like IMTX, CRBU, they are most likely to be in the red tomorrow because there will be profit taking. That's how some day traders might be operating. CRBU was up 4.92%. Again, sentiment-based trade supported by 9-day exponential moving average, constrained by the horizontal resistance at 6.24, which is coming from a long time. momentum is really good, and MACD is very close to the signal line to cross over. So Caribou also looks good here. Bluebird is starting to recover slowly and steadily. All the trading has been in a very, very slim band. It's a doji candle with a very, very thin body. So people are tentatively investing in blue, and it has a long way to go. Momentum is at the very bottom. Interest is all gone. Motivation is gone. MACD is also at the very bottom. So when you come to the very bottom, nothing happens other than bouncing back. That's what we experience. Some people even call it a dead cat bounce. We don't know if this is a dead cat bounce. VERV was up 3.76% against sentiments. DNA was up 3.53%. Very narrow trading out here. But nevertheless, we are within yesterday's range, and we have gained 3.53%. ARKG is up 3.02%. Illumina is up 2.42%. And if you look at the candle that we have here for Illumina, it shows that we have been constrained by a resistance at 141.43. When you look at the MACD, it's absolutely bullish. It has crossed beyond the resistance that we had at 4.32 in the past. So it's doing extremely well. But RSI is just about overheated. Illumina is moving from strength to strength mainly because of the Grail issue being resolved. So I unfortunately don't have too much money. I just had 10 Illumina shares in my portfolio. I'm happy with that. But Illumina is going up, and I think it's on its way back up to regain at least half of its past glory. That said, look at NTLA, it was up 1.96%. Again, sentiment-based trades, and Beam was up 1.59%. PACB was up 1.43%. Editas up 1.27%. NVTA was up somewhere around 0.82%. Bionano was flat, and CRISPR Therapeutics was down minus 0.35%. I think all the bloodletting and selling has been done after the resignation of the chief medical officer. Of course, it was not anything about the company. It was just other prospects. But today we got stopped by 61.66. Which is the horizontal resistance that we have. I'm going to mark this red so that we know that it's a resistance. So we have fallen very quickly in the last couple of days. We also have resistance from this diagonal line of support of the earlier flag. And we also have resistance from the 20-day and the 9-day exponential moving average. All of this is really, really a strong resistance. But I think fundamentally CRISPR should have the ability to come out from here. So I would look forward to seeing some positives on CRISPR tomorrow. Given that we are just about below average on the momentum, I'm hopeful that it could pick up. But nothing is guaranteed. Allogene was down 0.72 and Prime Medicine was down 1.02%. Well, then the question is, what did I do today? Not much. Just watched the market and worked on a giant jigsaw puzzle. I'm really happy that I could complete 1/4 of the puzzle. And I've also uploaded some new blogs to ShareTreck website, and I've started a podcast for the immune system guys. So I have uploaded three episodes in the podcast out there. And I think you should check out the ShareTreck website because I have put new blogs there. Please check it out during your downtime. Put some comments there and put some likes out there. You can visit that at sharetrek.com. So that's what I did. Now, what's my plan for tomorrow? Tomorrow, I'm going to watch what happens. I'm going to look at the yields. I'm going to look at how much traction the Red Sea shipping crisis news gets. If it gets a lot of traction, and if all talking heads on TV are going to be talking about it, then we can rest assured that there will be some kind of inflation. Whether or not there's actually a shortage, just the mention of supply chain bottleneck would make everything expensive. And we have got Christmas coming, and this is when retail does a whole lot of sales. So there is a chance that we can suddenly see a spike in the yields. So I want to watch that carefully, because if that happens, then we are going to see share market fall. So we are also looking at VIX raising a little bit. That's what I'll be doing. I'll be watching it carefully, and I'll sell FNGU at the slightest risk that I see. Even if I make a little bit of a loss, I don't mind. I would rather sit on cash than allow FNGU to go, because FNGU is a twin-edged sword. When there is gains, it is superlative. When there is losses, that's also very superlative. It can move very quickly, $3 or $4 up, $3 or $4 down. So I have to be careful with that one. But I think that 2024 is going to be great because of what I mentioned in my thesis. And I think tomorrow, apart from that, I'm going to be looking at QQQ to see how it fares in terms of where the price goes with regard to the resistance and the supports. If it starts breaking down, then I'll have to take a few decisions about some of the shares that are in profit, like Walmart, and I think I mentioned a few shares that I have, including CRISPR, which has got accrued profits in there. So I'd have to decide to realize all of those things. So it's going to be a busy day tomorrow. We already started our holidays today. We have been having a relaxed time. So I hope you guys have also been able to do all your Christmas shopping and everything, and are all set for a Merry Christmas and a Happy New Year. So I'll catch up with you again with the next video. Take care. Have a great day. Bye for now.